Restaking is really about making capital available and getting the lowest cost of capital assets available in the crypto space. And essentially, we want to make that compatible with collateral provision for insurance.
Welcome back to London.
Thank you.
Are you enjoying the weather?
I enjoyed it yesterday, and today it's a bit more complicated, but it's really rainy in Madrid, so I'm not going to complain too much.
Yeah. You guys, you can't flex on us too much over here.
No, unfortunately not. Not today it is.
I understand you've been having a very insurance-y day.
Yes, I was just at the Lloyd's of London building. Beautiful.
Mm-hmm.
Quite something, actually. I didn't get to ring the bell. But no, it's you really see how big of an industry it is, how massive and how important it is for the global world.
Amazing, yeah. I mean, very timely, and we'll get into it. Conversations on insurance, on-chain cover, Restaked capital, and how all of these things are coming together. I think a nice way to kick off. It's just explaining a little bit around what you do, your role at Symbiotic. And if you could just talk us through what is Symbiotic, what does it do, what are you guys building? And then we can kind of talk a little bit more around some recent developments.
Sure. Do you also want like a personal intro, like background? Like
I want everything.
Okay.
Give us the whole shebang.
I was born. No, so I've been in crypto for quite some time. The first thing I ever did was an internship at Paris Blockchain Week. Then I went to Ledger. I started to essentially go into like the more like a B2B part of crypto at the beginning of my career. So Ledger Enterprise. Then I got really interested into staking. I joined Kiln. While I was at Kiln, my job was to essentially study the nascent restaking space. And essentially,
what year was this?
So I joined Kiln in September of 2023.
Wow. It's just amazing how quickly things have developed.
Absolutely,
then,
right? Crypto moves fast, for sure.
Yeah.
September 2023. So I started to study like what we call the shared security space. Shared security because economic security can be shared by multiple different protocols. We'll go into a bit deeper into like how that looks like in practice. But essentially, because I fell down the rabbit hole of the shared security space, restaking, Bitcoin staking, all of that world, I eventually joined what I thought was, and I still think is, the best protocol in this entire space, Symbiotic. My role at Kiln was protocol specialist at Kiln. And back then, my role was more like prioritizing new protocols, so studying all of these nascent protocols, also like new L1s, new innovations on top of existing protocols, and prioritizing where Kiln was going to launch a validator business next. And I'm also a senior protocol specialist at Symbiotic, but it's more around studying the different use cases that Symbiotic can be building on top of that different protocols can build on top of Symbiotic, like the different ways that the Symbiotic protocol can be used. And so within this whole thing, like there's a lot of partnership work being involved. There's a lot of business development work, but also a little bit of research and a little bit of product. So it's a good blend. It touches a lot of things. I really like it, and it helps me to grow like as someone that is trying to understand the space, the crypto space more and more, and see the real life use cases where it could be meaningful.
Yeah, fantastic. It's like your career so far is back-to-back top hits of brilliant crypto companies, I think. So yeah, congratulations on that.
Thanks.
And you've landed somewhere excellent, I think. When we met roughly a year ago, we started talking, and honestly, still getting my head around restaking, liquid staking infrastructure, all of the things that you can do with it. But you explained Symbiotic to me as contextualizing it within the space of everything that exists already, whereas with some other environments, you can restake Ethereum assets, for example. Symbiotic is more taking the approach of any on-chain asset, you can restake it and use it for a whole variety of use cases, which we'll dive into. Is that right? Have I got the right... Like, it's more flexible, it's a little bit more open. Is that the approach you guys have got?
Yeah, I mean, if you look at staking, like, what are you doing when you are staking Ethereum? When you're staking ETH, you are essentially like backing some form of computation, which is essentially like maintaining and proposing new blocks on the Ethereum blockchain. So yeah, you're putting collateral at stake in the form of ETH to essentially like back the decentralization of the network. Restaking, when it can launch, is the exact same thing, but instead of using just ETH, which can already be staked, which can only earn a native yield, you use an already staked version of ETH.
Yep.
And one of the reasons for that is just that you can have like lower cost of capital. So instead of competing with Ethereum the layer one to get economic security for your protocol, you can take the layer on top and share essentially a part of your economic security with Ethereum. And essentially, like, that originated in the ETH staking space, but at the end of the day, you can do that with any asset.
Yep.
And Symbiotic being on Ethereum, you can do that thing with any ERC20. And as the year passed, we realized that Symbiotic and shared security can be much more than just rehypothecation to back a set of operators that are running blockchain-like protocols or like traditional like networks that require like infrastructure.
Yep.
But the same collateral can be used to underwrite credit risk, for example, what CAP is doing, or underwrite, for example, like DeFi risk, like what Nexus Mutual is doing. And right now we're in a period where like we're looking at so many different ways that that this collateral can be used.
Yeah.
Because at the tech level, the thing that really enables a wide variety of use cases is the slashing piece. So if you guys are familiar with slashing is what happens when a node operator behaves badly on a proof of stake blockchain. And what happens is that the collateral that is staked to that node operator is burned, or part of it is burned.
Yep.
And so burn means that like it vanishes from existence. Now within Symbiotic, when we launched, we also allowed for the possibility of that slashing to not result in a burn of the tokens, but in a redistribution. So with that brick on top, you can like sky is the limit as to like what you can build on top. What you can build on top. Like you can literally like make, for example, like you could make like a simple use case which will just be a roulette. Like everybody like stakes a bit, and then after a period of time, one winner gets redistributed the entire pot. That's and this and so you can build like a casino on top, but you can also build a compliant risk underwriting framework.
Really, really interesting, and something I'd not really thought about before. Obviously, when you're just staking Ethereum, the slashing penalties arise, as you say, when someone makes a mistake or executes some bad behavior, right? So it's there to disincentivize people gaming the system, essentially. But what you're saying is now, what you guys have opened up is making the event that triggers slashing configurable, but then also what the slashing results in is also configurable.
Yeah.
So it's very much you observe an on-chain event, and then it kicks off an automated transaction, and that can be anything, right? Many use cases.
And of course, like it can be automated, but some for some regulatory reasons, like it could be needed to be triggered manually.
Interesting.
So yeah, we're trying to be as modular and flexible as possible to let anybody build what they need.
Brilliant. So yeah, obviously Native is an insurance broker, and we are partnered very closely with Nexus Mutual. I think one of the things I'm really excited to ask you about is the partnership with Symbiotic and Nexus Mutual. Tell me everything about that. I think it's probably like a really important watershed moment. I think for various reasons, the importance of you guys teaming up probably won't be felt at least for kind of 6 to 12 months as this whole space matures. And then people will realize it's a foundational piece. But yeah, what's going on there? What are you guys doing together?
Yeah, I mean, to put it simply, like insurance is on one side, you have to have the demand for insurance. You have to you need to have people wanting to insure specific risk.
Yeah.
You have to have people that have the knowledge to know how to price this risk. So understand like how much the people paying for the insurance will have to pay in premiums. And you, most really importantly, you need to have the collateral to pay the claims in case something goes wrong.
Yes.
So Symbiotic is really trying to help on that last front. So, like I was saying before, like restaking is really about making capital available and getting the lowest cost of capital assets available in the crypto space. And essentially, we want to make that compatible with collateral provision for insurance. So the partnership with Nexus Mutual is just Nexus Mutual extending their underwriting capacity by commercializing a second loss tranche to Symbiotic vaults.
Yeah.
And so the same Symbiotic vaults that are already like allocating to traditional proof of stake networks and that in the future will be doing much more novel things. The idea is that these different use cases can be composable with one another, can be compatible with underwriting DeFi risk through Nexus Mutual. And so all of these different use cases do not have to fight for the same collateral in fragmented spaces, but they can all benefit from a platform that unifies all of this available collateral.
Yeah. Why I find this so exciting, I think for the better part of last year, we saw a lot of, let's say, traditional capital markets start to be mirrored on-chain, right? Morpho, Euler, Aave, this kind of massive burgeoning of borrowing and lending markets. It's really starting to take shape. That's very, very popular. Now we're starting to see the same thing happen. Fine, we call it on-chain coverage, cover, whatever. But what it mirrors is the traditional insurance setup, right? And why this is exciting is because this happens with insurance markets all the time. They work together. They pool their insurance capital together. So then they individually harbor less risk, but together they can go and enter into these risk markets and back more of these risks together, right? So very interesting. They either do it together as a one layer, or they can reinsure each other, and so the opportunities are endless. When are we going to start seeing that in the on-chain space? So I think you guys working in Nexus is the very first step. There are fragmented pools of staked capital, right? We have a lot of staked Bitcoin providers now who are starting to get popular. Players like Eigenlayer. Then there are the guys over at SatLayer, Catalysis, Babylon. Do you foresee a world in which all of these different distributed pools are coming together? And if so, what is the gap to getting there, right? Because they're all quite architecturally different.
I believe there will only be one winner. And it just makes sense. I don't really see, like, the only reason why like there will be like more than one participant, more than one big platform where all of these collateral needs to be composable with all of the different use cases is that we have like fundamental design changes that cater to specific use cases that could not be compatible with others. And that might be the case, that might exist. I kind of think that like on Symbiotic, we're flexible enough to cater to pretty much all of the different use cases.
Yeah.
So why would you build in a fragmented space and not just benefit from the existing network effect of the platform? Now, granted, maybe we will not be the winner. I think we will. Or at least I'm not seeing a worthy contender as of today in terms of design flexibility. But yeah, like I think it will be a winner takes most market.
Yeah, absolutely. And I think with a lot of these things, right, it's about doing it. When we first met, that's when you had just published a piece on the Symbiotic website around what an on-chain insurance system could look like built on Symbiotic. And it's, 10 months later, and you guys have figured it out and you're deploying capital to cover risk. So I think very much the space rewards people who move quickly and deploy solutions. And I think that's what you guys are doing.
Granted, we had already we had already people building on top of this idea way before we released the blog.
Fantastic.
We've had some time to think about it. Yeah.
Brilliant.
I guess like my question to you is what, like, you as an insurance professional, what is your take on like the intersection of crypto and risk underwriting in general? Why hasn't the big names in underwriting and insurance already tried to tackle crypto related risks? And where do you think could there be like an intersection between the on-chain players like ourselves, like Nexus Mutual, and the more traditional providers?
Well, preface this by saying the reason Native was founded, at least part of the reason why, was to try and bring these worlds together, right? You have an abundance of traditional, let's call it fiat-based capital, that insurance companies are sitting on. And you have this rapidly growing industry, which is on-chain assets industry, which is very, very much at risk and underinsured, right? Like, it's really hard to get an estimate of how insured the cryptocurrency, let's call it the digital assets industry is, but I think its estimates are around 3 or 4% max, right? Which is crazy. That is not a system that is ready for institutional adoption.
What's that percentage in TradFi?
Oh, it's got to be closer to like 65, 70% plus, right? Big, not even big, institutions, well-regulated institutions don't move without there being an insurance layer. And when you do, you get very, very badly stung. And for good reason, right? Not wanting to get it too much into the details, but when that happens and there aren't protections in place, it tends to be socialized losses, right? People effectively take the piss, they break all the kinds of rules, and then, really bad things happen. So insurance is almost that layer that it gives confidence, it like gives weight to the rules, it really allows people to move in a way that fosters innovation, fosters a way to actually move capital, deploy capital confidently. So there's a long way to go in the industry that we're in. And there's a mismatch, right? There is all of this traditional insurance capital and all of this opportunity to insure it. Up until, 5-6 years ago, traditional insurers, especially in and around London, were very hesitant to put capital behind these risks. And we had a good chat about this previously, but it's not so much that they don't want a piece of the action, but it's very much less understood than the stuff they're specialized in. And so bringing new risks into your book, when you don't have to, you already have a profitable business, it already does very well. You're taking on a lot of risk to potentially blow up something that's been going well for some of these companies for 200 years, right? So it's a question of opportunity versus opportunity cost. But we are starting now to finally see insurers take a look at this technology and say, actually, there's a big opportunity here.
But one thing that I was thinking about after we had that chat yesterday is there like crypto is not just like wow, this magical new race that came to planet Earth that sometime now we have to figure out. The first thing that was injured was like marine transport. I'm pretty sure that marine transport back then, when Lloyd's of London started, for example, when you had to insure against being attacked by Jack Sparrow, are completely different from the huge cargo ships that are traveling the Atlantic, made out of steel and protected by God knows what.
Yeah. But I think it's a great analogy, right? I think the reality is when privateers were sailing to the New World, people were effectively taking bets on whether they're going to make it back. There were a lot of losses. People lost ships, lives, cargo all the time. And now you look at the industry today, I actually don't know what the loss ratio is in things like international shipping, but you would imagine, comparing it to what it used to be 200 years ago, all of that innovation, that technology has reduced loss ratios to a point where it is a part of day-to-day life, right? Like it's so entrenched in the way that business is done. We are at the Jack Sparrow stage of crypto. And the problem is we're at that stage, but it is developing so fast that it is difficult to keep up. If you think about everything that happened last year with, let's call them vaults, right? What used to be called smart contracts with automated bits going on, and now entire vault systems with like automated lending and borrowing and funding. And like that really has just come into its own in 6 months. If you're an insurer who at the start of last year was like, let's just start understanding smart contract risk, and now at the end of the year, like, wow, here's like $1 billion market that's opened up just with Morpho, it's very difficult to stay on top of that technological advancement whilst you can understand it, but working it into your complex risk model, which protects your insurance balance sheet, that's a little bit more tricky, right? Because anytime you bring that risk in, it can affect your whole book. So it's the pace of change that makes it a little bit tough to keep up with. And I think this is where on-chain cover providers really come into their own, because they understand that stuff, they live it, they breathe it, and the speed to which you can, as you say, set up a coverage protocol that observes an event, immediately causes a slashing event that pays out immediately. We're talking like milliseconds sometimes, right, when these things happen. The world of traditional insurance moves in days, weeks, months. You make a claim, you have to verify that claim, have an investigation. There might be a big legal proceeding. The world of digital assets, as you know, doesn't work like that. So it's...
Yeah. But also on crypto, like things are a bit more easily provable.
Oh, definitely.
Everything is on chain.
Definitely.
If your ship was left New York and was supposed to arrive in Hong Kong, like maybe that like that ship never arrived, but you don't know if the captain just left and wandered off to Australia, or like if the ship sank, where did the ship sank? Yeah. In crypto, everything is on the public ledger.
And you know what? That's bad for both reasons, right? One, you could have a false claim, right? Which is bad. Like you claim your policy, fine. There's no evidence, but you kind of pressure the insurer into paying. It's fine. But equally so, there is ambiguity on the other side. The insurer can say, "Hey, well, there's no proof." I do think that problem is solved with on-chain cover. And one of the reasons why I was so excited to join Native, which partners so closely with Nexus, and those guys have known each other for a long time, I was just astounded. Every claim that Nexus has ever paid out is viewable by anyone. There's this fantastic Gene dashboard. You can see every rejection of a claim, the evidence that was with it, the reasons as to why a claim was paid or not. Like, this is stuff that traditional insurers can't compete with. And to be honest, they're probably looking at it going, this is a little bit scary for us. In 10 years' time, if this becomes the norm, the way that we're doing business, no one will trust it anymore. So we are very rapidly, I think, moving towards a place where people are going to be demanding more from insurance companies. And again, that's where Nexus Mutual, Symbiotic can really flex a muscle and disrupt the space. I think it's very exciting.
Absolutely, yeah. Agreed.
One more question. and this is really more about you, like less about Symbiotic, but in fact, all of the jobs you've had, Symbiotic, Kiln, at Ledger, in every single one of those, there's been like an element of discovery and keeping pace with what's new, where the opportunities are, where people are building. Personally, I find it really overwhelming. Like it's difficult. So I'd like to understand your process of how do you stay on top of the market when it changes so rapidly. Are you just plugged into various news sources? Are you actively researching? Is it from talking to interesting people? Like, how do you stay on top of what's happening next?
It's a super interesting question, and I think it's an important question in crypto, which moves so fast. And I think everybody like is facing the same problem. And sometimes I have the feeling that like things are moving like much faster that like my brain can process. But at the end of the day, a lot of these you have to, I guess you have to, your brain has to like package things into big categories. And so, maybe something is infrastructure, maybe something is DeFi. Within DeFi, there's like different types of subcategories, and most of them kind of usually have the same patterns of like how their design works. And when you've trained your brain to just look at many different design types and many different logics of like how specific protocols can work, your brain is like chess. Your brain is used to do like your brain is just trained to do like pattern recognition, and it makes things like much easier to understand. Like for example, like why is our like internet native people like, why is it like, why would, if I show like a new app to you, it would be very easy for you to look to find the menu icon and to look to wander around like an app, because most of these different apps have like similar design, and you are natively comfortable using any app and any website. For our grandparents, it's not the same. Our grandparents, like everything has to be visible, and things are not just evidence. I think our generation is the first generation to be semi-crypto native, and so it might be a bit easier it's definitely more easier for us than for our parents to get it. And for our grandchildren, it will be complete no-brainer. Yeah.
Okay. Very quick follow-up question then. So
also, maybe to add on that, everything is also being abstracted.
Yes.
Like we understand like how to use like internet apps, but like I cannot tell you how TCP/IP works.
Of course.
Under the hoop, like so I cannot tell you about the different layers that make the internet as we know today. But we can still adopt it very easily. And I think even when you're building on crypto, you do not necessarily need to understand like every single piece of the stack.
Thank God, because I would not be able to understand anything.
You need to understand like what it means for you as a builder, what it means for you as someone that works in that space, or what it means for you as a user. You have to really understand like the second order effects, but you do not need to know like what is the latest type of ASIC that Bitcoin miners are using at this very moment.
So you wake up in the morning, you have some coffee, you're like reviewing what's happened last night in all the markets around the world. You're looking at Milk Road. It sounds to me like what you're doing, the passive recognition of something that's valuable. What is it that you're looking for, and how are you sifting out all of the nonsense? Because there is so much in this space, and there's people create stuff that it's not valuable. It's solely made for extracting value from other people. What is it that you're looking for where you're like, okay, that's actually very useful technology. That's going to push some boundaries somewhere. That might have some real world application that disrupts something that's very inefficient. Is there something you're looking for, or do you think it's just a natural instinct? You're like, actually, that's very interesting. I should pay attention to that.
I just look at things that I know or that I'm starting to know, and this is where I can make a judgment. But I think you have to just you should not try to like learn everything in one go. You should try to be specialized. You should start with maybe you want to start with infrastructure. Within infrastructure, maybe you want to be really knowledgeable about the zero knowledge space, or maybe you just like love DeFi and you want to really understand like the mechanics behind like specific lending protocols and try to understand this part. Like you should not try to understand everything. And I do not pretend like I can just like read the morning crypto newspaper and say, yeah, this is good, this is bad, this is blah. That's really if I could do that, I would be I would be leading the top VC. And there will be no competition.
There's still plenty of time, Edgar. Plenty of time. Right, should we do some rapid fire?
Yeah, sure.
Okay, rapid fire one. Are we in a bear market now?
Yes, we are in a bear market.
And why do you say this?
Because the prices are going down.
It's really good.
Because we've seen in crypto so far 4-year cycles, and we usually top in the fourth quarter of the post-halving year.
Yep.
Now, I do not think that like the halving has any significance nowadays, but I think it's just a self-fulfilling prophecy.
Yep.
And yeah, we topped this cycle again in the fourth quarter of the post-halving year.
Yeah.
And prices have gone down since. And yeah, sometimes it rains and after there is sun.
Yeah, I look forward to that. MicroStrategy this year, will it go under?
I don't think so.
Okay, fine.
They raised a big cash. They raised a lot of cash so that they could, pay the debt for.
I find it hard to decipher what's FUD around that whole situation and what's really going on. And to be honest, I zone out actually.
Yeah, I mean, at the end of the day, MicroStrategy. Like we're talking about like the what you can do with your time. You can spend a lot of time before understanding all of the ins and outs of the financialization machine that MicroStrategy has built on top of Bitcoin, the asset. And I've not spent that time. That's not how I spend my time.
That is a rabbit hole for sure. Okay, prediction. What is the best and worst things that will happen in 2026 within digital assets? Well, the best things already happened. It was the partnership between Symbiotic and Nexus Mutual.
Absolutely. Yeah. you said it. That's the best thing. Nothing will top this. No, what's the best? It depends on what you perceive as good or bad.
Very political.
Because I think that we will probably see huge TradFi players venture into the DeFi space and start creating vaults of their own. I would say that's probably good. Isn't bad. Probably there's gonna be a hack at least this year. Yeah. At least one hack this year.
Bigger than Bybit, do you think?
Oof. The prices have gone down, so maybe not.
More to grab. Brilliant. Okay. Edgar, thank you so much. I'm really glad you've had an enjoyable visit to London. I think I've wanted to have this conversation with you for a while now. And this partnership that you've announced recently with Nexus Mutual is the perfect opportunity as we have these worlds of restaked capital, insurance, capital markets all converging. So now's the perfect time. But honestly, thank you. That was
a pleasure, guys.